Hello and welcome back everyone to Payroll Question Time. I'm going to leave it another 60 seconds or so just to get everyone joining the webinar. We all know now the new world of work means when a webinar starts, we all start jumping in and no one's ever there early, except for the 64, now 70, that joined us slightly before time. So bear with us. If you are already on the call, please do remember to post in your questions. I've got a question box open, ready to receive them, and we can ask the amazing panel here the questions in real time as we go through. So don't be afraid. Please raise your voice if you've got a burning question you want our panel to answer. Put it in the chat box. I'll pick it up and we'll try and get through as many of those as possible. Any of those we don't get to, we'll still answer and then we'll follow those up in a separate document later on. So it's going to give it another 30 seconds or so and we'll get started. I don't know how many of you out there it's raining outside, but we're going to be bringing you the sunshine. We're going to be it's going to be a good chat. We get everybody smiling before the big football game later for those that are interested. So it's going to be a nice, fun and exciting conversation. So we should get going in just a moment. And please, please, please do put your conversations and your questions in that chat box. Super. So I'm going to get started. I know people are still joining, but don't worry, we're going to get through some housekeeping bits as we start. So first things first, we are going to be running various polls throughout this webinar. We want to hear your thoughts and opinions, so please do let us know. Please do answer those polls. We'll try and comment on them as much as we can as well. We are, of course, recording this session. We will send you the slides and recording after the session is over. And there will be a survey that follows as well. Please do take part in it. It allows us to improve these webinars as we go. Please do put your thoughts in on the subjects you would like us to talk about as well. Really, really good. And finally, there is a disclaimer, which I'm going to read out to you now. The presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Fabulous. Well, that's the good stuff out of the way. Let me introduce you to the panel and myself. For those that don't know me, I'm the host of the Payroll podcast. I'm the founder of JGA Recruitment Group, which are a specialist payroll recruiter, and I'm a Reward 300 member and the proud host of Payroll Question Time. That's enough for me. Let me lead you to the panel to introduce themselves. Let's start with John Keeble.
Well, I've moved up the pecking order. I'm first to be introduced. Thanks, Nick. My name is John Keeble. I'm an employment partner in DWF. We're an international law firm, and delighted to be here as always, as it gives me the opportunity to wear a shirt at least once a month. So,
and over to you, Samantha.
Oh, hi. Yes, I'm Samantha Mann. I'm here from Armstrong Watson. I'm the payroll training consultant supporting the payroll team, who are the best team in the organisation. Hopefully no one from Armstrong Watson is listening. And we serve employers and businesses, family businesses across the north and into Scotland. So as you might imagine, Scottish rate of income tax and arrestment orders is very much a topic of most days. And yes, I do try to put something on most days. So unlike John, I do occasionally wear a shirt more than once. And I'm rambling already, so I'm going to move on. Thank you,
Okay,
Nick.
I'm going to move to my which will be that way around, left, which is Lou.
Hi, my name's Lou Gray and I'm Head of Transitions and Operations at EY Absolute. I'm also a CIPP board member, as well as being on the Reward 300, and I also have individual chartered status for payroll, with over 30 years in payroll, 20 of them in local government.
Fantastic. And Simon.
Okay, hi everyone, I'm Simon Parsons, Director of UK Compliance Strategies for SQ Works, which is the major European-based payroll service provider, and European-based. It is a true European UK company, and it's great to be with you. I chair the BCS Payroll Specialist Group, and the IRENE organisation sits on a number of consultation panels with government and with HMRC Bayes, DWP, and the pension regulator, would probably say, Andy. And I am part of Reward 300 as well.
Fantastic. And my last but no means least, the old school parenting used to be you should be seen and not heard. We've got it the other way around. Andy cannot be seen, but he can be heard. He's joining us today, Andy Nichols.
Hi everyone. Sorry, my having webcam difficulties and joys of laptops and stuff like that. But yes, great to be with you. And yeah, going to look after and talk about joys of pensions as it fits into whatever we're talking about. And my background's all payroll, so it's nice and neat and tidy in that respect. Looking forward to see what happens.
Fantastic. So as you can all see, an expert panel with years and years of experience, a wealth of expertise we're going to be bringing to you today. The subjects we're going to be discussing are termination payments, national minimum wage for 2022, expenses and benefits in kind, so P11Ds, PSAs, payrolling and Class 1A NICs, IR35, the pensions update, and some hot topics of the day as well. Now, right before we dive into our first subject of termination payments, I want to get all of you involved. So let's start our first poll. We're going to do a little bit of a temperature check. I want to find out what is really challenging people at the moment. So Hannah, would you mind running our first poll for us? Oh, if Hannah's there.
Hi, Nick. That poll hasn't been added. We're just going to go
okay.
to the termination
Maybe we'll come
part.
back to that one. Don't worry. We'll start with termination payments. It's a big topic, which is probably just as well, because we've got lots to get through. A number of changes have been made to the treatment of termination payments and post-employment notice pay for income tax, also known as PENP. Now, they have both legal and payroll-related implications. So I'm going to go to both John and Simon to begin with, starting with Simon, if you can perhaps tell us a little bit about the payroll implications before we go to the legal ones.
Well, yes, we've had a couple of changes that came into law a couple of years ago. I don't think all employers, or even potentially those that are coming up with termination agreements, maybe appreciate them, but there is an obligation that notice is subject to tax and national insurance. In the old days, you could kind of cheat a bit. So if you sort of came with compensation as opposed to a notice, it was treated as tax and NI free. And the HMRC and the government, I guess, have cottoned on to the fact that this was happening. And so compensatory notice is now also subject to tax and national insurance, whereas before it wasn't. So it's just knowing that aspect. And then they have this special calculation to be performed on a termination payment to determine which element is subject to that tax and NI as notice, which parts are part of the severance, which aren't, and meet the 30K tax and NI free, and then also help determine the amounts above which are subject to tax on the employee and a Class 1A liability of 30.8% on the employer. Hopefully that made sense. I've used lots of terminologies there, but in effect, the PEMP aids the calculation of deciding what is taxable and deniable, what is not. And then you've got the decision on the 30K limits of which amounts are then subject to tax above and the Class 1A liability on the employer. Do I hand over to John if you've got a little bit more?
John, if you could elaborate on the legal implications, that'd be great.
Yes, well, Simon's right. In the good old days, if you didn't have a contractual payment in lieu of notice clause, you had some chance of getting that tax-free, and that's all gone under the PENP rules. There are some slight twists from a legal and a tax perspective, because, of course, what you've got to tax is the unexpired portion of the notice period. And there are some twists on that, certainly in case question of gross misconduct. And where someone's dismissed for gross misconduct, they're dismissed immediately because they've done something seriously wrong. And from a PENP point of view, HMRC's view is that where an employee has been immediately or summarily dismissed and loses their right to a notice period or notice pay, in effect, there isn't a PENP amount. But however, sometimes when someone's been dismissed, it can be overturned. And in an employment tribunal claim, someone may say, well, look, you've dismissed me for gross misconduct, but that's wrong. I should have been entitled to my notice. And if that occurs, then you then move to a situation where you do have to carry out a PENP calculation. So it's a slight twist from a legal perspective to the PENP rules on that front.
Excellent. Now, I know we do have a poll, hopefully, on this subject, which is basically finding out how everyone is feeling about the changes. Hannah, are we able to run that poll? Super. So we've got a quick poll. If you get everyone involved here, if you can, please do put your answers in. Have the revised rules regarding the taxation of termination payments arising made easier? So yes, the rules are easier for everyone to understand. No, we are still not clear what the rules are. Almost, we understand pylon, but what is PENP about? Or 4, we have not been impacted as yet. Please do vote, and we will be commenting on the results of that poll in just a moment. While we do, we've also had a question come in. So if I can prepare you for this question, Simon, while we get those results. The question that's come in is this. It's regarding section 406B, the ITPA 2003, where we can make a severance payment, a wholly tax and NI free. It says our lawyers have advised us they are seeking HMRC approval, but we don't know how. So we can make this payment. Is there any action we need to be aware of from a payroll perspective, because the sum is large? Super. So how'd that poll go, Hannah?
Well, there we go.
Samantha, what are your thoughts on this poll? 40% are saying we understand pylon, but what is PENP all about? Perhaps you can elaborate.
No, interesting. There's some interesting results there. Only 11% are still not clear what the rules are. That's remarkable. But almost, we understand pay in lieu of notice, but what is the post-employment notice pay all about? 40% there. And I'm really pleased to see the 29%. Yes, the rules are easier for everyone to understand. That is really good. But what the 40%, now I know Simon will probably go into a little bit more detail as he answers Nick's questions, but of course that post-employment notice pay is an all-important calculation which asks, that asks us to use a formula. Anyone who knows me knows that my head almost explodes when we start talking formulas. But within that formula, we're looking at the basic pay. We're looking at the days in the notice period. We're looking at the days in the pay period. And then, of course, we're considering the taxable elements of the settlement, the relevant tax award. The RTI, RTA, sorry, and of course Simon's already mentioned the 30,000 limit. If we were looking at statutory redundancy pay, that would automatically sit within the 30,000 limit. I wouldn't fall within any of these calculations, but I think they are really interesting results, and I think this is probably a subject that we will revisit in the future because I think it's going to run and run. What is interesting, of course, is yes, this was introduced. These changes were introduced back on the 6th of April 2018 as a result of simplification measures made by the Office of Tax Simplification. Not too certain quite how that worked. But there have been slight tweaks, of course, to the regulations and the wording since April 2020 regarding the amount that goes in there. And let's not forget, of course, the 13.8% Class 1A national insurance contribution that exists in real time where the payments exceed the 30,000 tax-free amount. I'm going to hand over to you, Simon, because you've got questions to answer.
Actually, just before we do answer that question, I'm going to ask just to jump with a quick one. What would you do for the 11% who are still not clear what the rules are? Where would you advise they went to try and help them understand quickly with what is a very complex and large subject?
It is. Well, firstly, there's an excellent article that I read by Susan Ball and Paul Tucker, which was written a couple of years ago when the new rules were being introduced. And we can place, if that's all right with everybody else on the panel, I'm going to pop that link into the chat box. And then, of course, we've got HMRC's manuals. There's a whole host of information on the taxation of termination payments. So we'll pop a couple of links in there. And of course, there's a range of webinars. HMRC have touched on this, but only, they don't really delve into this because this is a tax specialist area. But as a starter for 10, we'll pop some links to further information to signpost you to further information, if that'll be helpful, Nick.
Yeah, amazing. That would be fantastic, Samantha. That'd be great. So over to you then, Simon. We've got a client here that wants to make a large severance payment, wholly tax and NI free. What are the sum is large? So what are the implications from a payroll perspective we need to be aware of?
Yeah. Well, I've thought a bit more because we discussed this one a little bit earlier. I thought a bit more on this, and I think there's another fact to this that wasn't clear in the original question. But generally, severance is just a name for something. So as a general principle, severance, termination, redundancy, settlement agreements all have interchanging meanings and may have underlying differences to them. So as a general principle, a severance payment would still be subject to PEMP. The 30k limit amounts over, but there's a reference to an IT protection, I think there, Nick, which probably puts a different angle on it. And I think, and it wasn't clear in the original question, which I think relates to medical exemption, which is slightly different. So it may be a disability case as opposed to just, I find this quite often, sometimes the terminology is used, we'll have that from some of our clients. They'll just quote something, for example, they'll say, well, this is a modified scheme. What does modified scheme mean? And the reality is, well, it has multiple meanings, so it depends on the context of the term. So here, is the severance payment a termination payment, or is it a disability settlement because they're actually unfit to work? It's slightly different, isn't it, John, I'm thinking for medical severance?
Yes, it is. There are, under 406, there are specific rules that apply to injury or disability. And if you fall within that section, any payments can be made on a basis which is both tax-free and free from NICs. It's a reasonably complex area, and it probably take a section all in itself. The overarching thing that you need to bear in mind and take into account, I think, is that you should always be seeking approval for making that payment, and that's certainly what we've done. We've found that when you do make those applications, HMRC can come back reasonably quickly in terms of giving you clearance on that. And we've had some that have been 2 weeks, some that have been slightly longer than that. But provided that the reason for the termination is a disability, and that's the driver for it, then there is some scope for getting the entirety of that payment on a wholly tax-free basis.
Excellent,
Sure.
fantastic. Well,
another comment. Can I make another comment on the PEMP? Because I think sure. Sam's talked about an article a couple of years ago. There have been some slight adjustments. I'm saying this from memory, to the extent that with termination payments, some people used to make adjustments in relation to foreign service. And I think some of those exemptions have actually been removed. So you used to be able to claim, well, for 2 years of my career, I worked overseas. So you can't count that bit. And I don't think that's still the case. No, I think it's taxable.
It isn't. And just one point on something slightly different, which is the 30k. Whilst statutory redundancy payment will fall within that under 401, if there is non-statutory redundancy pay, i.e. An enhancement, that doesn't fall within the 30k exemption on PEMP.
Excellent. Well, I think we know it's a big subject area that we could probably spend the entire 90 minutes talking over, but I hope that gives everyone a little bit of a whistle-stop tour. We're going to include those links that Samantha highlighted in the chat as well, and we'll try and cover those in the covering notes. Keep an eye on that. But let's move on to subject number 2, which is national minimum wage for 2022. We're going to be talking about the low pay commission, salary sacrifice, or living wage, and furlough. I'd like though to start with yourself, Simon, because when we were talking about this yesterday, you gave a really interesting story about quite a complex childcare case that had different implications for national minimum wage. So I wonder if you could tell the viewers today about that example.
Yeah, there was a conference held quite recently. So I'm one of the national minimum wage stakeholder conference members because I sit on what's called the employer payroll group of the HMRC. And they have a subgroup which meets with the national minimum wage people because currently it's policed by Her Majesty's Revenue and Customs. And it's been a couple of scenarios that we've portrayed a number of times. But the reality is, what do you do with holiday? And then there's a consideration of what do you do with furlough. So as an example, if you can't actually sacrifice furlough pay, it's post-sacrifice. So the funding of the salary sacrifice benefit is entirely the employer's, really, during periods of furlough. However, we have flexi furlough, so people are receiving money for working and receiving furlough. What happens now if you deduct the salary sacrifice against the earnings? Your national minimum wage earnings will be deducted equally. You could even say they've got money from furlough to cover that, but that extends to other things such as holiday. So holiday pay does not really count for NMW pay. So if you go on holiday for a week, if you had £50 childcare vouchers taken off and you've been on holiday for the whole week and not received any other pay, that's fine. If you're on holiday for 4 days and you're paid for 1 day and you've earned the same amount of money, the £50 would come off the 1 day's money. You may well be, as an employer, in breach of national minimum wage law. So it's just pointing out it's very confusing, very convoluted, but fairly strictly policed by Her Majesty's Revenue and Customs and BEIS in their policy, because I think Paul Scully is the latest minister that deals with it. They have not approved salary sacrifice reducing anything other than the pay for counting towards national minimum wage. So be aware, it's quite a tricky subject.
Yeah, it sounds tricky. And I know, Samantha, we spoke yesterday about some of the salary sacrifice considerations we need to think about, particularly because salary sacrifice is a reduction to pay, not a reduction from pay. So can you elaborate a little bit about what salary sacrifice is and how we need to think about it?
Yes, salary sacrifice is, and anyone who knows me again knows I have a little hobby horse on this. Salary sacrifice is a contractual agreement between the employer and the employee, where the employee contractually agrees to sacrifice, i.e. give up a higher cash payment in return for a non-cash benefit. And childcare vouchers provide us with a largely historical now good example. But of course, when the tax relief, the new tax reliefs under, I think it was Gordon Brown's chancellorship, when they were introduced, of course, there was a lot of concern, particularly from certain sectors, about the fact that actually their salary sacrifices, if they weren't reflected on the pay slip, as a kind of a reduction to the pay, they couldn't offer salary sacrifices to do with the terms and conditions, long-standing historical union agreed terms and conditions. And so what we saw from the introduction of childcare vouchers was a gradual increase in the reflection of salary sacrifice deductions on the pay slip, which almost made it look as if there was actually pay being deducted rather than actually that contractual reduction. The employee doesn't have a contractual right to that pay, and where they do actually have a contractual right to that pay, there is a question mark over whether or not the sacrifice is actually a legitimate sacrifice and whether or not it's just tax avoidance, and there are tax cases that back that up historically. So I think the point of this particular discussion really is to make clear that this is a contractual reduction to pay and not a deduction from pay. And where, as Simon's already highlighted, where you have deductions from pay, then they can have quite significant national minimum wage implications.
Well, so, you mentioned the pay slip there, Samantha. That'd be a really good time to perhaps raise our next poll, because we talk about on the poll, what evidence of contractual changes do people provide for a salary sacrifice arrangement? So I don't know if you agree, it'd be great to get everyone's view on this. Are you highlighting it on a pay slip, as Samantha mentioned, some people do? Are you highlighting it through contract variation letters? Perhaps you don't need to do anything at all, or you don't have any salary sacrifice, or maybe use an application form. If you can complete that poll for us, it'd be great to see the results and maybe have a comment on those as well. Be interested to see what comes in. Of course.
Yeah, because it's a common misunderstanding that people think they're buying a benefit. If they're buying it, the revenue would consider that you have to pay that out of your net pay. Salary sacrifice isn't buying anything. The employer is actually giving it to you for free for the agreement of taking.
Can you salary sacrifice holiday pay?
You can. Oh no, you can have holiday pay as a salary sacrifice arrangement to increase your entitlement, but you can if it was the only amount there. Yeah, that's the oddity.
Interesting.
If it's mixed, it doesn't reduce the holiday pay; it reduces the other pay.
Interesting. So as we get the results of those poll results in just a moment, Lou, I wonder if you could talk to us about some of the considerations in terms of how this relates to the real living wage.
I think in reality, I mean, the real living wage, and it's which employers have signed up to the real living wage. At the moment, the priority, I think, for many businesses to go back on the national minimum wage and what their employees are getting, because I think maybe some employers aren't aware of all the deductions and all the considerations that you have to make whenever you're looking at your employees. You know, whenever they clock in and clock out, is that the actual time that they've worked? Or do you, as an employer, make an employee come to work 15 or 20 minutes beforehand? You know, do they have to stay behind work, for example, in the shops to take off the tills? You know, as an employer, do employers make their employees pay for their shoes or any part of their uniform, so that you're considering what actually is the net pay? And for national minimum wage, whenever you're looking at a particular week, if somebody has dropped behind in the national minimum wage, that actually has a huge implication for that employee and for your business. And HMRC are really cracking down on ensuring that employers do understand their full responsibility, because this is a very complex area that, you know, was highlighted even on the 31st of December with the name and shame. This isn't going to go away, and employers have to recognise what their responsibilities are and the questions and the records that they're going to have to produce.
From a legal standpoint, John, as Samantha mentioned, there are some evidence, some cases out there which relate to salary sacrifice avoidance potentially. What are you seeing at the moment? Any additional, observations you could add?
Not so much on the salary sacrifice, but certainly from the national minimum wage. That the most issues that we've had coming through from clients has generally been around the uniform issue and the nuances around that. In the sense of, if you dictate that there's a particular dress code and someone has to wear black trousers and a white top, and they have to go out and buy those particular items, that would affect national minimum wage. And as an overarching point, it's that the one area where I think employers do try hard to comply with the national minimum wage, but there's the most inadvertent and unintentional breaches. So it's a particularly complex and difficult area for employers in our experience.
Some interesting noises coming through the channel there. Apologies. We've actually had a question come in, which I'd like to just address to the team if we can. So the question's come in. It says salary sacrifice is taken from the gross pay, so the employee is having a tax and NI saving. Is this right? If so, to make sure they are above the national minimum wage, do we use the remaining gross pay to make sure they're above the national minimum wage?
I would say it depends, Nick, because it depends what the remaining pay is. So only a base pay is considered part of national minimum wage pay. So if they've got a premium overtime amount, so if they've done some hours at time and a half, the half doesn't count. So there is an element of being very careful and in all these aspects. So generally, if people are working normally, there's probably not a challenge. The challenge is when they go on sick, maternity, or they're a part period starter, or there's been some other flexi furlough that's come into play, that the real challenges come in. But sometimes there's inadvertent things. So if I'm coming up for my retirement and I decide I want to salary sacrifice 100% of my pay into the pension scheme, because that would really benefit me and get the tax relief, the employer has just paid you nothing, and they will be required to pay the national minimum wage for all the hours you work. So there's an element of don't agree to things which will cause problems. But quite often it's but it just doesn't make sense. It must be allowed is the type of response. And I agree with you. You'd think it would, but it isn't. It's much more complex than that, and they are extremely strict. So there's an element of understanding what is paid for our national minimum wage purposes and not. I mean, here we've got really this part on real living wage. Real living wage is different. And I'll probably say it's possible to pay the real living wage and breach national minimum wage because the calculation basis is different. Generally, you think it wouldn't happen, but you could actually pay the real living wage and salary sacrifice everything, and you wouldn't have breached real living wage, but you would have breached national minimum wage, which is lower, because you wouldn't have earned anything. So it's being very careful, and it's just getting that concept that you're not buying anything. If you were, it wouldn't be tax and NI free.
I think you've just highlighted how complex payroll is, Simon, which is great. I think it was good to raise the profile. It's not an easy subject, as you've highlighted. Sorry to cut you off, Samantha. Jump in.
Oh, sorry. No, I was just going to add. So I think we were both jumping in. Sorry, Lou.
Okay.
The one common calculation needed as we approach a new year for national living wage and national minimum wage calculations or new rates is that salary sacrifice. And what we're seeing is employees being removed from the salary sacrifice. So it's almost to the detriment of them, because the person who asked the question recognises there are NI savings to be had where you can contractually sacrifice an amount. So these, and you would, these should benefit the lower paid, but actually the lower paid lose out because they have to come out of the salary sacrifice for fear that the employer would be falling foul of NMW regulations. So, and that's something that has to happen year in, year out, those calculations. Sorry, Lou,
well, let's have a look at some of those poll results. So maybe, Lou, you can comment on what the results come in here. If we got those ready, Hannah, here we go. So the evidence of contractual changes to provide for salary sacrifice, we've got the overwhelming result here is highlighting on a pay slip. What are your thoughts on these, Lou?
I mean, it's important that it is on a pay slip so that employees understand. But going back to my roots, there should be contract variation and letters shared with employees so that it is in writing. One of the areas that this was highlighted to me in particular is if you have, and this has happened in the jobs I've worked at, whenever ladies go off on maternity, and they already have a salary sacrifice arrangement in place. Sometimes it can be a shock that their maternity is based on the amount after the salary sacrifice, and very often they haven't understood it and don't realise the impact of a salary sacrifice arrangement whenever it's there. It's always if an employer doesn't have to need it, then that's great. 0% is excellent. We don't have salary sacrifice, 5%. I think that the payroll part of me thinks that's good too. I would be interested to hear about the application form, but I do think it's important that it's on a pay slip, because then the employee is having that reiterated. This is a salary sacrifice arrangement, but a contract variation is a letter that's shared with an employee on the arrangement that they've entered into, because it does have an impact on their salary.
Fantastic. Thank you, everyone, for putting an answer on that poll. It's really, really important to us so we can comment on those. We've actually had another question as well, so I'm loving the interactivity coming in from you viewers. Please do keep the questions coming. The next question is, what if an employee is on maternity SMP only, but the employee still wants to have the salary deduction, especially as childcare, as they have a child in care? Can we allow this if this is what they want, or do we legally have to say no?
You legally have to give them the benefit and charge them nothing, is the reality. So salary sacrifice ends. It's illegal to salary sacrifice, but because the childcare voucher or benefit is a non-cash benefit, it's a maternity right. You as an employer have to fund it. So they can stay in the scheme and not pay a penny.
Yeah.
Fabulous.
Well,
it has to be said, if my memory serves me correct, Simon, and you could probably add a few more details to this, is there was a case, a tribunal case, that actually put a whole big question mark over what the validity of that statement, which we all believe to be the case. But whether or not an employer could say, no, you're not entering the salary sacrifice now because you're going on maternity leave. We're not going to do these vouchers, you know. So
that's right. There were a couple of conditions there, Sam. One is that had to be part of the agreement in the first place, and there's been a bit of a sting in the tail, which is outlined in the statutory payments specialist group's minutes from, I think, November 2019, from memory. I'm saying that from memory, which is where the HMRC came back and said that the case argued by Peninsula in the court was that it was a diversion of salary. And the view is that, and therefore, it was only the employee allocating their monies to the provision of the childcare. Well, the answer back from HMRC is only provision of childcare by an employer is tax and NI free. So if you're buying childcare, it's after tax and NI. So why are you giving tax and NI relief? So the provision is understanding what the arrangement is. But if people think they're diverting money on behalf of the employee to a benefit, it's not an employer provided benefit. If you're providing it as a true salary sacrifice as an employer provided benefit, non-cash benefits are required to be provided for the duration of maternity leave.
Well, it's certainly a hot topic here. The questions are now flying in, which is great. If we don't get to all of them today, be rest assured we will follow up with some notes post-webinar with answers to all your questions. We're going to pick just a couple of these, if I may. Firstly, I think the case apparently you're referring to, Samantha, was the Peninsula versus Donaldson case, which has been highlighted here. So thank you ever so much for that, Beverly. Question then is, can you salary sacrifice against a car allowance whilst an employee is on maternity leave, is question one. And then another question here, just because they're obviously on the same theme, even if an employer covered childcare voucher in the contract, will they freeze it? So those two questions need answering if we can.
Well, if they're paying another amount of money on top of SMP, so the reality is statutory maternity pay, whether it's funded by an employer or partly by the government, is a state payment. Same with statutory sick pay. You could say employers fully fund statutory sick pay. It is not an employer payment. It is a state payment funded by the employer. That is kind of a bit of a strange distinction there. So is the employer paying that money? They are, but they're paying it because they're paying it on behalf of the state. So it's not an employment payment. So it's understanding that. So if you're actually paying a car allowance on top of the SMP, you can salary sacrifice that car allowance. Yes, but you can't salary sacrifice the SMP. But the provision of the benefit is required during maternity leave. On the other, about freezing childcare, potentially you'd be in breach of equality law. So you may actually be committing an act of sex discrimination. The only exception was if it was within the agreement of the salary sacrifice arrangement up front, and if it really was a diversion of salary, there shouldn't be any tax and NI relief anyway, because it's a failed sacrifice.
And last question, just before we move on to the next subject, we've got lots to get through, but I want to ask this last one because it relates to the poll. So Lou, if I can come to you for this. Emma has asked, if we have an employee benefits portal where employees select their benefits and it highlights that they're entering into a salary sacrifice scheme on that portal, does this suffice without having to do a contract variation letter as well?
I think maybe John would be better on that question. I mean, sure. My training has always been it has to be in writing to the employee, but maybe the employee portal takes that away, John?
Well, it depends on the terms of the employee portal. It may well be that there's a bit where someone ticks a box and as a result of that, they agree that this is a contractual variation. But I have to say, being the pedantic lawyer that I am, it makes me slightly nervous when you have arrangements which really involve a contractual change, which aren't documented in some form of contract or contract variation, which I think would always be the safer route from my perspective.
Sure. Sure. Well, thank you everyone for getting involved in that. I'm going to move us on to the next topic because I think we've got a lot to get through yet. We've got expenses and benefits in kind to discuss. Now, before we jump into this, I'm going to go straight to a poll because our audience has been so interactive so far. I want to keep them on that vein. So if we can launch poll 3, Hannah, that'd be great, which is titled "Collating and Completing the PAYE Settlement Agreement Calculation Can Be Time Consuming. Has the pandemic impacted this task this year?" So while we collate those results, if you can click either yes, there are a lot less items to include. Yes, it is more time consuming with different items. No, it is just the same, or we don't complete PSAs. So the options you've got there. Now, while we're gathering those results, we'll definitely come back to those. But there's obviously lots of things to consider here, because as a nation, we are all starting to orchestrate the complex and sensitive operation of returning employees to offices and places of work, which will presumably result in returning of home working equipment being just one element that I can see here as being something to consider. So perhaps I can jump to you, Samantha. Can you tell us a little bit about how COVID is potentially impacting on expenses and benefits in kind?
Absolutely, Nick. I mean, COVID's had a massive impact in the expenses and benefits in kind arena, simply because of the number of allowances that HMRC have had to make to the benefits code in recognition of the fact that so many employees were required to work from home, just up sticks and work from home, and therefore provide for themselves a working environment. And I know we've discussed working environments in the home due to COVID many times in previous question time panels. And as Nick said, the recent employer bulletin, which I still don't like the look of, sorry GDS, just prompted us to remember that the exemption of providing home the equipment or reimbursing an employee for purchasing equipment where they've had to do that was exempt, and that had been extended until April 22, 5th of April 2022. However, where the employee returns to the office but keeps the equipment, which could happen, and the ownership is passed from the employer to the employee, then there would be a taxable benefit in kind there, and that would be based on the market value at the date at which ownership exchanged. And again, there's further information to be had on HMRC's website on that. So indeed, it's had a massive impact. And was there a second part to that question? I don't think there was it, Nick?
No, but there is. I don't know, one question I did have here is, what about those that have only recently discovered some of the benefits of home working? The employer's a little bit late to the party. They've gone, oh, I could have actually given home working benefits during that part. We're in a new tax year now. You've missed out. What would be the implications there?
Well, I think a good example to that would be the payments the payment that either can be made free of tax by the employer to the employee, the home working payment, which kind of is a round sum amount that kind of recognises the fact that the employee will have additional expenses due to home working. This isn't new because of COVID, it has to be said. This has been around for a long time. The Chancellor increased the rate, not in the last budget, but in the budget 2020, from £4 a week to £6 a week. And then, of course, under normal circumstances, an employer would be required to work at home as part of the agreement, and therefore giving them the right to have this payment free of tax. But of course, COVID changed all of that, and it put employees who would normally not be required to work at home actually at home. So this was extended to them. Now, the payment can either be made free of tax and nixed by the employer to the employee, or the employee can claim tax relief on that where the employer doesn't pay it, and that's also been extended. And of course, you can claim back amounts. So if you're only just sort of coming to the party now and starting to think about this amount, the individual can claim tax relief for previous years, and they would do that through their personal tax account. Now, of course, they can claim additional expenses, actual real expenses, but they would need to evidence those, whereas the £6 payment doesn't require any evidence.
So good example has been given in our first question coming in already here. So a home worker leaves and they've been given a desk by the employer. Do they now have to give the desk back, or do they have to pay tax on it? So what do they need to do?
Yeah, it's not their desk. The employer has provided it for them to work at home, and as I mentioned, if they retain ownership, if the employer says, right, okay, you can have that, then there's a calculation to be had, which is based on the market value of that amount at the point at which the ownership is transferred. And my memory suggests it's 20% of the market value would become the taxable benefit. I'm hoping that Simon will nod there, at least, kind of suggesting that I've remembered that correctly. My memory is a bit dodgy at the best of times. But again, full details of how that would be achieved are to be found in the employment income manuals.
Super. Now let's jump to the mileage question, just because Simon, you gave a really interesting account of a scenario and some potential 2022 implications for travel allowance. Can you tell us a little bit more about those?
Sure, I'm sure I'm not alone, but you could say this is sort of a personal example, but I'm cited to it, so I have the money aside. But I normally do between 12 and 14,000 business miles a year. I have my own car, so on that basis I get 45 pence tax allowance on 10,000 miles and 25 pence for every mile over. So about £4,000 or £5,000 worth of business expense, which is tax-free. So I'll save 20 or 40 or 45% depending on where your earnings are. The challenge, of course, is we've been in the pandemic. And now HMRC have not adjusted my personal allowances. They know that that's what I do every year. So they add on an allowance to my tax code. When I do my self-assessment return in January, it's going to declare that my business mileage for 2021 was about 240 miles because I've been in lockdown. Now, if so the relief on that is 40% of 45 pence. So there's going to be a significant amount of tax that I haven't paid. That's going to hit employees that have normally been receiving business mileage and have been doing everything by Zoom and Teams since March 2020. That will hit the payment of the tax for under self-assessment for January 2022. It'll change the tax code for the remainder of 21-22, and it'll drop the tax code for 22-23 potentially automatically, even though I may be returning to some business miles, although I predict it won't be 12 to 14,000, it's probably going to be more like 6 to 8. So I'm just thinking the Chancellor may be looking to some sudden expense gains because we as workers are not suffering those expenses since the beginning of the pandemic. Excellent. Hopefully that made sense, some sense.
It did.
But I think lots of people might be a bit shocked about the tax liabilities that occur in January.
Certainly a big shock for me because I do similar mileage to you, so it has huge implications that I never would have considered. Yeah, I'm on the other side of the fence. I don't get to process and calculate all of this. This is for you complex payroll professionals to handle, but it sounds like a bit of a minefield. What about the PSA considerations, Samantha, for the PAYE settlement agreements? Can you tell us a little bit about any changes that will be impacting those?
Well, it's not so much recent changes, really. I mean, we would when we would get together to sort of bang heads to see what detail we would discuss. And as you might imagine, this is a timely topic because of the 6th of July deadline for submitting our P11Ds. But the pay-as-you-earn settlement agreement, which many will be aware of, is an agreement that takes certain items that are minor, irregular or impracticable to assess and report on a P11D. It takes them out of the employee taxation space and puts the bill firmly with the employer. When I think of an example for an impracticable, there was a dear friend once gave an example of a box of Mars bars. So in the kitchen next to the kettle, a box of Mars bars is provided for the staff to just take, have one as they make a cup of tea. I mean, obviously these days it would be a bowl of fruit. It wouldn't be a box of Mars bars, but it would be impracticable, of course, or impractical to calculate the value that each individual employee takes. Those of us who are chocoholics, like myself, would take, I don't know, umpteen every cup of tea, and I have a lot of cups of tea during the day. But then, of course, when I joined Slimming World, that amount would drop. But at the end of the year, the employer would really just not know what to put on a P11D for me, and that's the idea of where a PSA is probably not a good example, but it works for me in helping me to understand this pay-as-you-earn settlement agreement. Now, the agreement used to have to be made annually, but in recent years, again, down to simplification measures, the idea would be that an employer would enter into an agreement with HMRC, referred to as an enduring agreement, and the items that were shown on that agreement would stay in place unless anything changed. And I think our question relates to that, and whether or not, I know in talking to individuals over the last few years, I know that this can be an extremely time-consuming project to actually bring together, particularly for global employers, to bring together all of those amounts, those elements that they would normally include in a pay settlement agreement computation. And of course, on that computation, you're calculating the tax burden that the employee would have suffered, or had they had that burden themselves, and the employer, of course, is calculating what value of tax or tax that they would need to pay on behalf of the employee, as well as the Class 1B national insurance contributions. And it just intrigues me to wonder how that process has changed this year for individuals where these particularly global employees might not have travelled, like Simon, as much as normal.
Super, fantastic. And for you, Lou, you're obviously responsible for multiple client payrolls, got a lot of experience for potentially clients missing payrolling benefits deadlines. So, what do we do in that circumstance? What are the HMRC consequences of doing so as well? Can you elaborate for us?
Yeah, certainly. Of course, at the middle of February, HMRC unleashed the bulletin that told us that informally payrolling benefit had to end, and employers had to register by the 6th of April, so that everything going through the payroll was logged with them. Now, as we're now into June, I've had a number of clients have come and have said, even though we're continuing to process the benefits through the payroll, that would be an arrangement that the employer would have. We'd be waiting for an instruction, and now we're finding out that some employers have not registered with HMRC or have missed the deadline. What we've initially said to our clients is to go back to HMRC and see what they do. What they would recommend. We've had some clients maybe only missed it by a couple of days, and what would they be wanting, what steps to take. But now in June, we're in the process of reversing out some of the informally payrolling benefits, because there's been no update. We have received no information, and it's better to be safe than sorry at this stage to ensure that everybody's compliant. So I think it is very important. It was a very tight turnaround, 6 weeks to get an employer to register for the payroll their benefits. If an employer wasn't set up, of course, they had to wait for their ID to be able to go through that process. That was taken maybe 3 to 5 working days. So then the windows start to too narrow. And of course, in EY Absolute, we have global payrolls. So we're talking about businesses that are across the globe. And sometimes it's communicating that clear information for everybody to understand. So, I mean, what I would suggest is reach out to HMRC in the first instance, see if you can get a response. Of course, I know probably some of you are rolling your eyes at me thinking, have you tried to get a response from HMRC? Yes, I have. And sometimes you have good days and sometimes you have not so good days. But I still would be old fashioned in reaching out and talking to them and see if there's an arrangement or a way forward. Otherwise, it's back to the drawing board, doing what we're doing, reversing out, showing the clients the before payslip, the after payslip, trying to explain it so that all employees understand what the heck is going on in their payroll.
Super. Now we've had a question come in again, so I'm going to bring this back to you, Simon, because it relates to the P11D. Do you need to report renewing a visa on a P11D?
If the employer's meeting the cost,
I would
is
have
that
to
what we're
assume.
talking about here? Yes. If they're covering the cost, that might be. I don't know. If you can help me out on this one, John. If your view of where an employer actually meets some of the immigration costs of an individual.
Not something I've had to deal with, Simon, actually.
Yeah, it may be one we have to think about, and we'll answer in the Q&A feedback after, Nick. But I suspect if the employer is considered to be meeting a liability of the individual, then potentially it's taxable and deniable. But there may be considered that that's a genuine business expense, is it, in arrangement of the work?
It would seem, yeah.
I'm reserving judgment.
Well, let's have a look at the poll results then. If we can go back to those, Hannah, let's see what we've come back with. Perhaps, Lou, you could comment on those poll results again as they come in. We were there for just a moment. They flashed away. Here we go. So the overwhelming result then is no, it is just the same, 40%. What are your thoughts on that, Lou?
I mean, I would have felt that it would have been just the same. I suppose the added complication is COVID, the pandemic, and as Sam covered there, what difference has it made to the employer and what they're doing? There is that unfortunate 16% that says, no, sorry, 15% that it is more time consuming but with different items. But of course, whenever you do have different items, it's trying to figure out where they fit in and how you have to word it. And then you've got the lucky 29% who don't have to complete PSA, so that's definitely a gift.
Yeah, absolutely. I mean, what I would add there, of course, is where there have different items that haven't already been approved by HMRC and included in the agreement. You know, they would need to be added. So a further application would need to go off to HMRC. You know, I'm thinking about the previous question, actually. I mean, there are a couple of elements there. Firstly, if you're taking on board an employee's liability or an employee's debt, that would be subject to Class 1 national insurance contributions. But equally, because it might be minor or irregular, might meet the irregular elements referred to in a PSA, it's possible that it could be included. Those visa costs could be included within a pay-as-you-earn settlement agreement. Please don't quote me to HMRC, but it certainly would tick the box for being irregular. It's not going to be a regular payment. So I'm not too certain how much it costs, so I don't know whether it would meet the minor amount, but it doesn't have to meet all three. It only has to meet one of those three. Sure. So it could be included on a PSA.
Well, we like the challenging questions coming in. We've been knee deep in the legislative payroll questions today, which is great, and some real interaction coming in. Before we jump into the next subject, which is a bit of a pivot away from the nitty gritty of payroll legislation as we jump into R35, there's a couple of questions that came in on our last subject that just came in after we started talking about expenses. If you don't mind me referring back to, I think there's some pressing questions here. One of them has come in just following on from your response on national minimum wage, Simon. It says, if employers cover the cost if they fall under the national wage due to maternity rights, how about cycle to work schemes? If the person is on maternity leave and they fall under national minimum wage, do we have to cover this too? Or also, do we cover any salary sacrifice if they're on maternity leave?
You can't recover any salary sacrifice from SMP. That's a fact. Now, what some cycle schemes may do is extend the recovery period. So they may stall it and start recovery again once someone returns into payment. But in theory, you could say, actually, it is the employer that's on the hook all the time. I think what's the challenge is with some salary sacrifice is understanding what they are. The provision of the benefit is fully funded by the employer regardless. The salary sacrifice arrangement is agreeing to a contractual pay cut, which may just happen to be the same amount or more or even less. During maternity, you have no pay to recover from because you haven't paid them anything, but they are entitled to continue the benefit. So some schemes will defer the collection. So quite often with a cycle scheme, they're for 1-2 years. And if you've got maternity in the middle, what they do is in effect delay it a year. Whether that's right or wrong is something you need to discuss with a professional, because some may see that as being a discriminatory act, but others would say that that's fine.
Sure. Okay. And we've got one more question coming. I said, please, can you answer this question before you jump to the next subject? So I'm going to do that for you. Thank you, Jackie, for sending it in. It says, can we just clarify? I'll come to you for this one, Samantha. Can you just clarify the discussion around childcare vouchers and salary sacrifice? If an employee goes on maternity leave, we're used to still provide them at the employer's cost, but HR will advise we no longer need to. Your discussion so far hasn't answered this. And in addition, could you also please include pension salary sacrifice? Does the employer still need to pay the employee sacrificed amount when on maternity? So obviously a lot of questions here around maternity and benefits.
Yes, and both of those are really good questions. I'm actually going to sort of hope that John kind of leaps in there with a legal angle from this. Now, Simon pointed out we've got the Peninsula case, and it was the Peninsula case versus Donaldson. And thank you for the mention of that. Whoever popped that in the chat is what really created the question over this, because when an employee goes on maternity leave, they no longer have the right remuneration. So the question is, are the payments, are they considered to be remuneration? If they are remuneration, then that would stop, just as like their salary would stop, and in that place would be statutory maternity pay. So the question is, relates to, does it have to stop or not? As Simon said, it much relates to the details of the contractual agreement that was put into place when the salary sacrifice arrangement was entered into. And depending on whether or not those have been met, would dictate whether or not it has to stop. I'm certainly not going to disagree with your HR team, but John, do you have any thoughts on that?
No, not particularly. I haven't considered the Donaldson case. I know it goes back, I think it's about 5 years ago, the Donaldson case, but I haven't looked at it recently, or had to look at it.
Yes.
Go on, Simon, you're going to...
If I give a repeat with you, Nick, is if your contract doesn't say it stops during maternity pay, it doesn't. And the HMRC have been quite clear. So even in their guidance, they're actually saying, what did your contract state? And again, from the notes from November 2019, they're saying if it was really remuneration, why wasn't tax and national insurance paid? So you need to seek appropriate professional advice on it, but I'd say the implication is you must continue the childcare voucher unless your contractual arrangement specifically excluded it, and most won't, so you have to continue it. And in relation to pensions, pension is actually a remuneration item, so you could say it can stop. However, pensions is covered by the Social Security Act. The Social Security Act requires that where someone is in receipt of maternity pay, including SMP, the employer must continue to contribute at the same rate as if the employee were working. Now, with a salary sacrifice arrangement, the individual has swapped a pay cut for enhanced employer contribution. Therefore, the contract has been varied to receive a higher employer contribution. Therefore, that's trapped by the Social Security Act, And during maternity leave, where there is any maternity pay, the employer must pay all of the money that it used to pay before they started the maternity leave. Otherwise, you're potentially committing an act of sex discrimination. Sorry, I'm always black and white on those sorts of things, Nick.
That's
And
all right.
it's-
Well,
I mean,
Maria's
yeah.
actually Maria's come in on this as well as a viewer who's written in a response that she got from ACAS on this, and so the ACAS advised her they need to come to an agreement with the employee going on maternity leave, as we cannot make deductions from S&P. We said we can do one of the following. One, the employee can stop the pension contributions during maternity leave pay, in which case the employer will also stop with the contributions, or two, the employee will agree to a voluntary deduction from their gross pay and revert to salary sacrifice arrangement on return from maternity leave. Does that sound?
Yeah, I'd suggest that's in breach of the Social Security Act. Now, this is a question that Andy could actually give us a view on, I think.
Yeah, I was going to say, but you kindly put it really well, Simon. I mean, from our perspective, the individual's done a salary sacrifice agreement where they're giving up part of their pay for that employer, additional employer contribution, and that will continue during the paid maternity pay time. So we would expect a full normal employer contribution, shall we call it that, as well as the salary sacrificed amount. So the full, because it's all employer contribution, so it should all be paid. We wouldn't expect the individual to agree to anything else.
Sure, I'm thinking an employer could convince an employee maybe to contractually change their mind. The employee would be foolish to agree to it.
Yes.
It might be considered an act of discrimination.
Some brilliant questions from everybody, so thank you so much for posting those in. I think some food for thought for future discussions, no doubt. So thank you ever so much. One that's actually got all of our guests pondering over that visa question on the P11D as well. So thank you for that, Louise. Let's jump over to our next subject then, which is IR35. And I'm going to ask John to lead us on this, if you can, John. Just any updates or bear traps, shall I say, for payroll managers or payroll professionals to be aware of now that we're in full swing of IR35?
Well, thanks, Nick. And we are in full swing. And hopefully, given the changes came in April, everyone's joined the IR35 party, although it's probably the party that you really don't want to be invited to in the first place. But in terms of the areas where we're seeing some misconceptions or misunderstandings or potential falling flat, firstly is the question of who has to carry out the assessment. And there is a misconception out there that if you get a contractor who carries out their own IR35 assessment and gives it to you, that's sufficient. And it isn't. The fundamental change, or one of the fundamental changes, was that it's up to the employer to carry out the IR35 assessment. And if you don't carry it out, you can carry the can for the tax and the NI. So it is absolutely fundamental that you do that. Now, I understand that there's always going to be some pressure from the contractor, but you have to remember that you're in charge of that process. And if you issue a status determination statement that concludes that someone is inside IR35 and they don't like it, then they can challenge that. There's a process there to be followed. But it is fundamental that you carry out the assessment. A couple of other points that people may have missed. Everyone's using the CEST tool in the main to work out whether people fall inside or outside IR35. And HMRC have said that they will stand behind that assessment if the input's correct. But you also have to take reasonable care in terms of carrying out that assessment. HMRC has given some examples of what constitutes reasonable care and what doesn't. And I'll just focus, I think, a little bit more on what doesn't constitute reasonable care. And that would include just making a blanket assessment rather than an individual assessment. And perhaps importantly, an absence of any proper support or training within an organisation for those who are making those assessments. And that also applies to completing the status determination statement. So even if you think you're getting it right, you may have to demonstrate to HMRC that you've taken reasonable care in coming to the outcome. And if you don't, again, that's going to be subject to challenge. The other area that we're seeing is that people think that this is a one-off transaction. What you do is you perform the assessment and that's the end of the matter. But it is absolutely fundamental that you keep the process under review. And if there's a change in the nature of the engagement or anything else which is material has changed, you need to carry out a reassessment. Otherwise, you can fall foul of IR35. In terms of sort of bear traps, I think there's an element here. If it looks like a duck and quacks like a duck, then you'll get a fair sense of whether someone is inside or outside IR35. And so, for example, if it's someone's first contract and they don't have a history of contracting, that may dilute the picture of self-employment. You know, what's the length of the engagement? You know, I can't tell you how many times we've been talking to people about IR35, and they say, "Oh yeah, he's been with us for 5 years." It tends to indicate that it's not a genuine contracting position. You know, is the individual named on the contract? Again, suggests that it may be personal service. So there's a number of things that when you look at it and take a step back, sometimes you can take a holistic view and get a pretty good sense as to where the position sits from an IR35 perspective. Just a point on umbrellas. And with umbrellas, as with all companies, you can have good companies and bad companies and good umbrellas and bad umbrellas. And it is important that you do some sensible due diligence on your contractual chain. And it's probably fair to say that umbrellas are somewhat under the spotlight and have been for some time. There was HMR spotlight in 2018 that highlighted tax avoidance. Another one in April 2020 that highlighted the same thing. And of course, we've had the issue of mini umbrella companies and mini umbrella company fraud. And in May of this year, there was a draft policy document submitted to the Treasury calling for greater regulation when it comes to umbrella companies. So it's fair to say that they're somewhat under the spotlight, and I anticipate there'll probably be some form of regulation coming their way, probably falling under the same type of regime that regulates employment agencies and employment businesses. So it's clearly a potential reputational issue and also a legal issue if you are using umbrellas who are not going to be compliant in the way that they should be. So I think it's, again, important that you do your due diligence and work out whether the people that you're contracting with are fully complying with all of their obligations under the relevant regulation.
Super. And just to echo what John's already said, as a recruitment owner, I see this a lot with contractors who 9 times out of 10 will try and convince us and the end client that they are definitely outside R35. It's often in their interest to be outside R35 because of the benefits that come with it. And they will do their own assessments and convince you very confidently that they are outside because they've done their own self-assessment. But please, I just want to reiterate what John said. You need to do your own due diligence because it's always in the nearly always in the contractor's interest to put themselves outside. But if you rely on their information, it's actually yourself as the end user that will be liable for their unpaid tax and NI and NICs if you end up making an incorrect assessment. So just be really, really clear on that. We've had to do that as a recruitment agency, and unfortunately for one of our contractors, we've had to move them inside if they wanted to continue as much as they wanted to be outside, and that's because we made our own determinations. So just to re-emphasize that, because you don't want to be falling foul or getting caught out with that a little bit later on. Anything else to add to the R35? Sorry.
Well, I've got one point just arising from what you said, Nick, about an inside IR35 assessment. What we saw in 2017 when the public sector rules came in, where there was a process of individuals arguing till they're blue in the face that they're outside IR35, told that they're not and they're inside. What they then came back in and said was, well, in that case, if we're inside IR35, we must be workers under the employment legislation. Therefore, I'd like all my holiday pay that you haven't paid me for the last 2 years. So there's a slight kicker in the tail, potentially, where there's an IR35 assessment.
Super, fantastic. Well, let's
Yeah.
move on to
Can I
the.
just add, no, just a minute, Nick, before you do that,
Of course.
if it's all right? Can I chat? It's Andy.
Yeah, Andy.
Yes. Just, and that ties into what John was saying, really, is that if the person is a personal service worker, they are going to be covered for automatic enrolment. Unless they're truly self-employed, or the IR35 because it's a limited company type setup, then if they're named personally, then a personal service worker will come under automatic enrolment. So it's not just tax and eyes, it's also pension to be considered, etc.
Very good.
Yes.
Very good point to make. Yeah.
But there's an element
talk
of thinking a worker would not be inside IR35 because they would be a worker.
Mhm. Yeah, if the answer's worker, then AE will kick in.
That's right, and they're not under IR35. They're subject to student loans, attachment of earnings orders, everything.
Mhm.
So sometimes I think there's a misconception that a deemed employee is an employee. An employee and a worker are employees and workers. A deemed employee is neither because they're a worker or an employee of their own company. The engager is not their employer.
Agree, said Andy. In case people don't know yet, agree. And it is important to know because automatic enrolment will kick in.
Sure.
Yeah.
Well, Andy,
so they don't have a right to holiday from their engager. They have a right to holiday from their own business.
Mhm.
We're going to give you the pedestal now, Andy, as we go into pensions as well. And I've already got some questions coming in from the audience in anticipation of this pension subject, which I will get to in due course. So please do bear with for those that put those questions into me already. But over to you, Andy. Tell us a little bit of an update on pensions. Yeah, I'll let you take the floor.
Yeah, indeed. Well, we've sort of salary sacrifice and maternity. We have sort of covered. So I'll just if there's any questions, then obviously we can pick that back up. But as we were discussing, if an individual's agreed a salary sacrifice in exchange for an employer contribution, then that is how it's going to operate. And if they go on maternity leave, then that salary sacrifice is still in place unless there's something strange in the contract, and that's what I would expect the employer to be paying the full employer contribution during the paid maternity pay area when they're getting their maternity pay. And SMP is not, as we've already discussed, not something you can sacrifice from. So maybe other pay that they could take that sacrifice from, and that's down to the employer and the employee's agreement. So on the pensions dashboard, obviously there's a lot been going on, and the Pension Schemes Act 2021 introduced a lot of framework of legislation regarding the pensions dashboard, also the collective defined contribution schemes and new regulatory powers for the pensions regulator. And I don't need to go through all of those, obviously, in terms of things, but because that pension scheme bill came in, that gave that framework for legislation to be laid, regulations, secondary legislation, we want to call it, so that things like the pension dashboard can be enacted. And the principle behind it is fairly straightforward, that the individuals will be able to access their pension information online securely. It'll be all in one place. And then that will enable better planning for retirement and also financial health and well-being as well. So that came in the dashboard almost getting on for 2 years ago, the whole concept. But during 2020 and during 2021, you've got all the things requiring to be considered and put into place is being developed. So you've got making sure the person who's logging in is the person, so identity verification, the architecture, the IT structure requirements, and of course the data, what data is going to come out of pension schemes into the dashboard, and when will the schemes start to come on board, all the different types of pension schemes, the master trusts, the public service schemes, obviously state pension scheme, all that is in the process of being looked at and being considered. But the time frame is basically this year, next year, everything should be developed and testing with voluntary onboarding of these some pension providers. 2023 onwards, there'll be the proper onboarding and dashboard availability type thing, and ideally 2024 it should be up and running and people can access their pension data across all the schemes that they've got, even if they've forgotten it. So that'd be really great. It'd be a really positive thing for employees to have. In terms of payroll impact, probably the biggest impact will be when the pension providers start to look at their data and realise that they've got bits missing, and they need those gaps filled, because that data comes primarily from the employer. So, and that would be HR and payroll data that they're going to be looking to fill any gaps in that information, because they will need to have that information fully provided to the pensions dashboard. I think that's probably the dashboard in simple terms. Obviously, people can ask questions in terms of the actual salary sacrifice potential already covered. COVID-19 aspects, I think it's probably more along the lines of, I don't know if you're aware, but pension providers are required to ensure the right amount of money is being paid in terms of contributions at the right time. And if after a period of time they haven't been able to get the employer to pay those monies over, then they have to statutory whistleblow to TPR to tell us, and then we'll speak to the employer, we'll issue unpaid contributions notices, etc., enforcing that payment. Over COVID, we relaxed the rules so that reporting deadline that the pension provider had to tell us if an employer wasn't being compliant, that was 150 days during COVID. We increased it from 90. It's now gone back to 90 days as at the end of March. So if employers aren't paying it over in time, then if it's gone to the 90-day limit, then we will be notified and we will get involved directly. Obviously, furloughs coming to an end, so there may be a lot of things having difficulty, employers having difficulty, but we still expect employers to pay money over, and that is probably key. In simple things as well, in terms of COVID-19, that means there's less communication access, people not working in the office, letters going missing. So we do say to employers, please make sure your primary and secondary contact details, who we will write to, who we will email, are up to date on our website. So please, if you haven't done that, maybe because personnel have changed, etc. as well, then please go to TPR and update your contact details to get the right people informed. In terms of future, I've already mentioned about the Pension Schemes Act, but there are obviously new powers, such as if an individual gives false information, etc., to the regulator, then, or even to trustees of pension schemes, and that can be up to £1 million fine. There's things such as putting people in jail if they willfully and reckless behaviour causes towards a pension scheme, then that can be 7 years imprisonment, unlimited fine. So there's a lot more power to make sure that people actually get the income they should have on retirement, which is our main focus as a pensions regulator, protecting members and their future. What else do we want to say?
Well, I've had a couple of questions coming here for you, Andy. If I can jump to those quickly while we've still got the people throwing questions my way. One of them is specifically for you. It says, for Andy, pension contribution from OMP and then AMP, is it different or is it the same?
So where the employer is paying occupational maternity pay, then that's an employer choice of payment. So first of all, if it's normal, I don't know if it's referring to salary sacrifice, if it just means normal contributions. So it's always important to look at the scheme rules, because scheme rules can be greater than statutory requirements. So the scheme rules, for instance, might say that SSP, SMP, all the statutory payments are pensionable. That is the norm, that statutory payments are pensionable, so you'd expect contributions to be deducted So if it's a contributory amount, i.e. the individual pays like 5% of their pay, and it's not salary sacrifice, it's just a normal contribution, and those contributions will continue. And I would expect that the SMP, OMP, etc. will have those contributions deducted. If it's salary sacrifice, SMP cannot have salary sacrifice, but occupational maternity pay possibly can. You just need to see what the agreement is between the employee and the employer over that. So it's possible that OMP could have the sacrifice amount, maybe the full sacrifice amount, deducted from that value.
Well, that links to another question where someone's actually said, please, can we just come back to this one more time? I'm a little bit confused and I really want this cleared up. So it says, just to be clear, salary sacrifice cannot be deducted from SMP, but employee pension contributions can. Is that correct?
Yeah, so normal contributions can, but salary sacrifice cannot come off of SMP.
Amazing, amazing. Well, listen, I'm
There's
aware
a subtle difference, though, Nick.
Go for it, Simon.
There's a subtle difference in that the employee contribution is based on the pay they receive. Employer contributions is based on what they would have received if they were working. So it's a lower amount if it's a true employee contribution. If it's a salary sacrifice, it has to be a full amount as if they were turning up to work every day. But if they're on maternity leave, a true employee contribution, not a salary sacrifice, is based on the money they get.
Yeah, so whatever the pensionable pay is, for the contributions,
Conscious of time, I'm hoping we've got a few minutes here, Hannah. We can get in one final quick poll. We've still got 99% of you with us, which is fantastic. And thank you so much for everyone contributing to the polls and to the questions throughout the course of this today's payroll question time. But our last poll, looking ahead to the end of CJOS, how will this impact you? Not at all. We haven't used it. Not at all. All employers will be back at work. If restrictions are not lifted, we may face redundancies. And other comments to chat box, please. So while we're just thinking about that for the last few minutes, I'm going to just talk about some hot topics to raise quickly. And I know there's going to be a struggle for the panel to answer these in 5 minutes left of time. But I know there was something you wanted to raise regarding right to work checks, Simon.
Sure, yes. On right to work, the law changes for EU citizens from the 1st of July. Unfortunately, the Home Office guidance checklists online have not been changed, but just be aware that there's no requirement to obtain EU settlement status from individuals. There's no requirement for retrospective action from those who may be under EU passports already. The new changes, when they are released, or the use of the online service becoming a little bit more compulsory than before, is for new employments from the 1st of July onwards.
Super. And another topic we were talking about as well was the potential, or maybe it's not potential, maybe it's confirmed, tax year change to becoming a calendar year in Ireland. Lou and Samantha, what are your thoughts?
Lou, do you want to go?
Well, I'm hoping it's all talk at the moment. It's just we're putting the idea out there and floating it past us to see what we think. But my advice is don't be too negative. Just take it on the chin and see what happens.
Yeah, I think this is what we're referring to here is a scoping document that's been published by the Office of Tax Simplification. And actually, some of our biggest debates today have been based on recommendations that originated from the Office of Tax Simplification. But it considers a change in the tax year from running from the 5th of April through to the 6th of April to ending on the 31st of March, and what impact that would potentially have. And it's calling for comments. What would the implications be? And we had quite a debate before the panel started on this. It also considers what would be the issues if we change to the 31st of December, like the Republic of Ireland have a calendar year tax year. So I think it's an interesting one, and I think if you've got a view, I think you need to get involved with Office of Tax Simplification. As I say, they're asking for.
I do think
let's get those poll results back up, Hannah, if we can, just before we close down and see what they have to say. 53% we haven't used it. Who would like to comment on these?
That's great. That's great for the 53.
Way to finish today's payroll question time webinar. Thank you ever so much for joining us. Thank you so much for all of your questions and for your participation in the polls as well. A little bit of additional good news to finish. PwC reported this week as well, the gender pay gap continues to fall. It was 14.3% in the year reporting 2017-18. It's fallen now, they believe, to 12.5%, with a lot more data still to follow. I'm sure that will be a subject area for a future PQT. So I just want to leave it here to say thank you to everyone for joining us today on Payroll Question Time. Our next one is going to be the 9th of July, so please do sign up. Send us all of your questions, subjects, anything you want us to cover in advance, and we'll do our best to incorporate it into the next Payroll Question Time. Just want to take this opportunity to thank this wonderful panel of experts, John, Samantha, Andy, Lou, and Simon, and to wish you all a great football game, depending which club you're supporting, be England or Scotland later on, if you're one of those two nations. And look forward to wishing you all a great month until we see you again in July. Thanks a lot.
Thank you, everybody.
Bye.
Everyone.